Hey traders, it's Hima here, and I've got chart of the week, the Big Apple, supply chain check. Today is Tuesday, October 13th, 2020. Important reminder before we look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So the stock of Apple's on the move today ahead of the iPhone event and the expected activities in the business surrounding it. And when you think about all the products Apple makes, which are obviously ubiquitous, everybody knows about them, the thing is that they all have lots of parts and materials that go into them. So I want to take a look at the supply chain with you. Now, there are many companies that provide parts to Apple. Many of them are not based in the US, so they're not necessarily easy to find in terms of stocks to trade or own. But there are some that are based in the US, and here's a sampling right here. So I wanted to give you a taste of how to look at the stocks of supply chain companies feeding into larger companies such as Apple, can't get larger than that, and be able to look at opportunities there, especially if you're looking for lower price stocks or markets that are a little less volatile than Apple itself. So for this, we're going to look at a weekly chart, and I'm going to look at the daily chart. And this is a little bit of a sampling of what I do with my coaching students every month in Skinny on Stocks Analysis Live. In fact, we go through hundreds of stocks and we look at them from a top-down view. So let's look at Triple M. As you see here, I have my radar screen matched up with my chart, so it'll populate. So 3M has been recovering and coming back towards a weekly lower high. So if it can get above those levels, then we might see a longer term reversal in this trend. For now, there's still potential upside off this latest short term move to come into the $180 range. AVGO has been climbing much more steadily higher and is at new highs, as you can see here. Now, the RSI power zones are reaching up into the bull resistance power zone. They're not there yet, but they're on their way. So if you're not already long AVGO, then you may not want to chase it right now. You may want to wait for a safer opportunity, potentially on a pullback. And you could look at the latest move off of the March 20th low and all the weekly higher lows to figure out where that pullback, if it occurs, might settle and provide the best risk reward. GLW has come back to its all-time highs, which posted back in September 2018. So you can see it's just coming, hovering near there. There's also lots of old highs in that area. So there's quite a bit of resistance here. So again, even though this has been strong, if you're not long currently, not the safest to get in now, especially given the way that this move has been extending higher. I'd protect profits as opposed to going long. FSLR is in a similar situation. In fact, FSLR is even more of a situation where if you're not long already, now's probably not the best time, because take a look at the expanding, rising highs and the boundary we have reached now that I'm kind of waving over. So this is an area where if you're long, protect your profits. And let's take a look at Intel, which is different than most of the others. Intel's actually in a area where it's got some further upside because of this contracting pattern that it's within. The first upside target is the old low at 56.76 from early July. And then after that, we've got the high July 24th. So those prices are $56 roughly and $61. So definitely room for further upside on Intel over the next several weeks to months here. JBL. Here's one where it's in this, again, expansive move, right? We had a higher high, then we had a lower low. So big picture over the past few years, it's just been kind of volatile and expanding. But in the current move higher, there is potential to come back into the range from late December 2019. So definitely risk reward there is more favorable given the recent higher low from the week ending September 11th. Okay, let's round this out with a couple more stocks. MCHP, so microchip technology, also in this expanding range. Look at how we had in January a higher high, but then in March a lower low, and now we're back at higher highs. I do not think that this is an area to buy at all. In fact, this is looking much more like a short-term sell opportunity for a pullback into the $95 area. But that's still technically against the trend, so you want to be careful with any shorts. If you're long, you definitely want to be looking to protect profits. Not necessarily get out, but be trailing your stops. Okay, Qualcomm. Qualcomm still remains a little bit more strong. You can see it's been rising. This is not an expanding formation. This has been steadily rising, higher highs and higher lows on the weekly chart. And we've got room to run into the bull resistance power zone. And last but not least, we've got Skyworks. And here, it's also been rising, posting higher highs and higher lows on the weekly chart since March, with potential upside for the RSI to push into the bull resistance power zone. The last time that was reached was last December. So there is potential for momentum to push up into there and price to be moving with it. So that's a look at some of the US-based stocks that are in the Apple supply chain. Again, if you want to look at the actual Apple analysis that I've done recently, I've provided this in my latest set of skinny market outlooks, and you're going to be seeing emails about how those can be made available to you. If you have questions, of course, reach out to us at support. All right, with that, keep an eye on those Apple supply stocks, and I'll catch you on the inside. You can sign up at himaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.